Welcome back. And this will be our ninth episode for a complete forex lesson for the beginners. If you are not a beginner, please check in the page for the intermediate or better to the advanced level, right? Don't waste your time here. This is purely for beginners, right? And we are on the episode 9. And this topic, in this episode, we are going to focus on the forex market analysis. What are the types of forex market analysis, right? We have in fact we have 3 of them. Market analysis. I told you the main purpose of this series. In fact, for this page, we should have the traders, right? Especially for the amateurs to understand what is forex, right? Know the terms and then do analysis on their own, right? Do technical analysis for that matter on their own. Get their own signal and trade at their convenience, right? So we are just avoiding the fact or the problems with buying signal for people and waiting for people to actually send you signal before you can actually trade. So our main focus is to help you understand and do technical analysis on your own. So this is the important episode of this playlist, right? So we have to have an overview, understanding of this, right? So there are 3 of them. And this is in fact, we have technical analysis, fundamental analysis, and then the sentiment analysis, right? Our focus in this playlist or for this page will be on technical analysis, right? So let's box up. Now, there are 3 types of market analysis: the technical analysis, fundamental analysis, and then sentiment analysis. There has always been a constant debate on as to which analysis is better. But to tell you the truth, you need to know all these 3, right? It is kind of liking like it is kind of like standing on 3-legged stool, right? If one of the legs is weak, the stool will break under your weight and you will fall flat on your face. So this is what we are talking about, right? 3, right? If you know one and then you are lacking in the other, it may consequently affect you, right? That's what we are talking about. But our more focus is on technical analysis. Don't get it twisted. So that's what we are talking about. Now, let's look at what is technical analysis. Now, technical analysis is the framework in which traders study price movement, right? That's what we do. We are just studying price movement, how price move, how they form, how they move, and how they form. That is it. Their nature. We are just learning that. That is what. Now, the theory is that a person can look at historical price movement, and determine the current trading conditions and potential price movement. So we are learning at history of prices, right? Prices have what happened, how they moved, what was the nature. We look at that. So with the history, we can actually anticipate the future. That is what it means. Looking at the current nature of the market. So that's what we do. Now, someone who uses technical analysis is called a technical analyst. Traders who use technical analysis are known as technical traders. It's as simple as that. The main evidence for using technical analysis is that theoretically, all current market information is reflected in the price. So what will happen is that whatever is happening on the market, the main focus or the main idea of forex analysis, forex, is the trading of currencies, real-time currencies. We are not talking about virtual currencies. We are talking about currencies which are real. What is happening in the market? People buying goods, people selling goods, right? A country's economy is becoming strong and against another currency, right? We have currency pairs. We have looked at them already, right? If you don't know about them, please go back and watch the video on currency pairs, the major, the minor, the crosses, and all that. In fact, the exotic also are also on the page, right? So we trade currencies against each other. So that's what we do. Now, and then whatever is happening in real life is being manifested, right? Displayed on our charts, right? the buyer's behavior and the seller's behavior, all their reactions are live in real time on your chart, on your PC. Now, technical traders generally ascribe to the belief that it's all on the charts, right? What it means that whatever is happening, like I said, whatever is happening in real time, is on the charts. You see them. So this simply means that all known fundamental information is priced into the current market current market price. That is it. This is just a picture of that. Now, if price reflects all information that is out there, the price action is all one would really need to make a trade, right? So if everything, if all the information in the market is presented on the chart, then that's all that we need. If you're a price action trader, right, a technical analyst trader, then this is all the information that we need is here. So we are looking at what technical analysis. We look at the rest and then how we will combine them together. So we are treating them individually. So just pay attention. Now, technical analysis looks at the rhythm, flow, and trends in price action. Now, have you ever heard the old adage, history tends to repeat itself? Right. Because whatever is happening in the market, how things happen, the reaction between the traders and the buyers, whatever happened there is what many a times not what happened. So history actually can repeat itself. It happens in real life. So now, if a certain price held as a major support or resistance level in the past, forex traders would keep an eye out for it and base their trades around that historical price level, right? So whatever happened, the reaction that happened between the buyers and sellers at a particular point in time, we anticipate that has a higher probability or tendency of happening again. So we look at those key levels, key times, and then utilize them, make use of them, take advantage. That's what technical analysis is about. On all these things and on your chart, you have to have special eyes to see them. So if you're an amateur, you will find it difficult. So this is our main goal, to teach you, to give you that third eye. Those third eyes or third eye to actually get this, grab it. So that is it now. Technical analysts look for similar patterns that have formed in the past and will form trade ideas, believing that price could possibly act the same way that it did before. Nice. Now, technical analysis is not so much about prediction, it's about probability, right? In fact, we are not saying it's not about prediction. All we are saying is that it's not so much, but it's still about prediction and then probability. That is it. Now, technical analysis is the study of historical price action in order to identify patterns and determine probabilities of the future direction of price, right? Now, so how the heck does one study historical price action? That's what we are going to do. Now, in the world of trading, when someone says technical analysis, the first thing that comes to mind is a chart. Technical analysis is about charts. Technical analysts use charts because they are the easiest way to visualize historical data. That gives us data. That gives us what? The direction, right? That is what it means. Now, technical analysts live, eat, and breathe charts, which is why they are often called chartists. That's just by the way, right? Now, you can look at past data, right? You can look at past data to help you spot trends and patterns, which could help you find some great trading opportunities, right? What is more is that, right, with all the traders who rely on technical analysis out there, these price patterns and indicator signals tend to become more fulfilling, right? They give you signal, they give you upper hand, confluence. Now, as more and more forex traders look for certain price levels and chart patterns, the more likely that these patterns will manifest themselves in the market. You should know, though, that technical analysis is very subjective. What it means is that we can be looking at the same chart, the same time frame, the same time, but your anticipation or your prediction may quite be different from mine. So that is why it's subjective. I may look at the chart now and then predict that the price is what will go up as in market to buy. And then another analyst will see that, oh, maybe it will move up maybe 30 minutes time. Then afterwards, it's going to be what the dip. So it's subjective. It's based on how you say it, right? So that is as simple as that. So, but we give you the general idea. What is it that you have to know? That is very what associated in the what in the intermediate what class. We put the link there so that if you wish to do that right away, you can do that, right? But if you are amateur, please don't rush. Now, just like Michelangelo, right? And then Donatello, forgive me with the name, and then Leonardo and Raphael are looking at the exact same chart setup or indicators, right? Setup. It doesn't mean that they will come up with the same idea of where price may be headed. I think that's what I just said, right? Now, the important thing is that you understand the concepts and the technical analysis, so you won't get nose bleeds, right? Nose bleeds whenever somebody starts talking about Fibonacci, Bollinger Bands, or pivot points. You look at this trend indicators later, right? So I may be looking at the market, seeing different things. Another person may look at the market and see a different thing. Don't be what? Alarmed that maybe you are doing the wrong thing. It just happens. We have different eyes, right? So as an amateur, we just give you the common eye for you to know, and then later you decide on your own thing. Now, we know you are thinking to yourself, geez, these guys are smart. They use crazy words like Fibonacci and Bollinger Bands. Never mind, they are just saying you understand them shortly. So I think that is technical analysis. So basically, technical analysis, you are studying what the charts, studying only the charts to have history, right? The history of how price moved up and down, and then you use that idea, that lesson, that data to predict what the future, where the market is highly what going to move. So that is it. Now we move to the third analysis, which is the fundamental analysis. Now fundamental analysis basically talks about what economic events, right? Economic events, in fact, news in the economy, right? Economic news. Basically, that is what it's talking about. So you may have, in fact, you may have heard what is maybe trading the news, right? It's a very dangerous thing to do if an amateur. In fact, an intermediate even student, I wouldn't advise you to be doing news trading. It's very, very risky. So this is under what? Fundamental analysis, economic news, economic events, holidays, and those things, right? That's what it's about. So fundamental analysis, it means said that news is what moves the market. You understand? News is what moves the market. The reason why we said it's very dangerous is that within this time, the market can actually move crazily. Very, very dangerous. So you can in the trade at this time, you can actually do huge sums of what? Money, dollars. Now every day news, every day various news is being released by these major countries. We have major countries, don't worry. And they either positively or negatively affect the currency pair involved, right? And make your trading decision based on the news you heard, right? So these news can actually affect the market positively or negatively. But I'm telling you that many a time it affects people, traders negatively because they are going to lose many a time. So that is it. So the news can be CNN, right? CNN and all that. So let's what moves the market, right? The government and central bank policy is part of the fundamental analysis, right? People actually study these things to actually what enter the market or exit the market, right? Unlike the technical analyst who only focuses on the charts, right? Just ignoring what the fundamental analysis, right? So these people also focus on this. They wait for events like this to actually enter the market because at this time the market actually moves Remove them any type of market analysis. I'm telling you the truth. But you what? Be guided. Now, government and central bank policies, political development and uncertainty, inflationary expectations, tax laws, stock market news, employment data, if you understand. So this is it. You can take note of them. So these are what fundamental what analysis. Now, fundamental analysis is a way of looking at the forex market by analyzing economic, right, social, and political forces that may affect currency prices, right? If you think about it, this makes a whole lot of sense. Just like in the economics 101 class, it is supply and demand that determines price, or in our case, the currency exchange rate. Using supply and demand as an indicator of where price could be headed is easy, right? Now, the hard part is analyzing all the factors that affect supply and demand. You can't analyze all of them. It's very difficult. There are many of them. So in other words, you have to look at different factors to determine whose economy is rocking like what? Blackpink, what about song? And then whose economy sucks. You have to understand the reasons why and how certain events like an increase in the unemployment rate affect a country's economy, right? Monetary policy, which ultimately affects the level of demand for its currency. You understand? So doing a fundamental analysis is very difficult. I'm telling you. I know some also say that technical analysis is difficult. Of course, I know technical analysis, and I also know fundamental analysis. But I'm telling you, fundamental analysis, they are very, very difficult to use to trade because their prediction is very, very difficult. Because within some short frame of time, things can happen crazily. And you have no idea whether market the news is going to be positive or negative. Within a twinkling of an eye, boom, things happen, and you find yourself wanted. So it's better advise that you stay away from this economic news, right? You do your technical analysis, and then I think you'll be fine. But at the end of this session, I will tell you how you can combine this. So don't worry, just bear in mind. Take note. Now, the idea behind this type of analysis is that if a country's current or future economic outlook is good, its currency should strengthen, right? The better shape of economies of a country's economy is the more foreign businesses and investors will. Let me take this again. The better shape a country's economy is, the more foreign businesses and investors will invest in that country, right? So when the economy is in good shape, investors will come in, they will troop in, do investments in that country, and there will be more economic activities and more economic growth. It's as simple as that, very logical. Now, this results in the need to purchase the country's what currency to obtain those assets. It's simple. If the foreigners or investors come into a country and they need to do business, they can't do this business in their currency. What do? They have to exchange this money into your current your country's what currency, right? So when they are doing that, your money will be on demand, your currency will be on demand, and your economy is going to be boosted. It's as simple as that. Higher interest rates make dollar-dominated financial assets more attractive. Right, that's simpler now. In order to get their hands on these lovely assets, traders and investors have to buy some US dollars first. So we are assuming that you are in US, you are investing in the US and do that. That's what it is. This increases demand for the currency. As a result, the value of the US dollar will likely increase against other currencies with lesser demand. Later on in the course, you will learn which economy data points tend to drive currency prices and why they do so. You will know who the Fed chairman is and how retail sales data reflects the economy. You will be spitting out global interest rate like Samsung. No problem. I mean, you be better off. That's what it means. To be able to use fundamental analysis, it is essential to understand how economic, financial, and political news will impact currency exchange rates. This requires a good understanding of macroeconomics and geopolitics. You will see this news on CNN, Bloomberg, and CNBC, whatever, right? So, and then there are some other sites that you can actually use them, right? We have forex.com, for the Forex Factory. That's what I use. It's one of the news platform that I use. Very good. I use Forex Factory, and then my FX book also is very good. That's what I use for my news, whatever analysis, my fundamental analysis, right? And then the last part of the analysis, the last, but not the least, is the sentiment analysis, right? If you look at what the technical, we talk about the charts. If you look at the fundamentals, we talk about economic events, news, policies, and all that, right? Now we are going to look at sentiment. Now, sentiment analysis is used to gauge how other traders feel. So this, as the name suggests, sentiment, we are talking about emotions, what people think, their reactions, right? It's psychologically, that is it. Now, whether it's about the overall currency market or about the particular currency pair, earlier we said that price action should theoretically reflect all available market information. Unfortunately, the forestry, sorry, it isn't that simple, right? It's not that simple. Whatever, even though I'm trying to make things simple for you, just for understanding, when it comes practically, it is not as simple as that. Just bear in mind, there's a lot you need to learn. This is actually a profession. Like you go to school and learn a course, a program. Now, the Forex market does not simply reflect all the information out there because all traders just do not act the same way. You do not see things the same way. We said earlier, people will be seeing buying potential, others also be seeing selling potential. Now, this is why sentiment analysis is important. Each trader has his or her own opinion of why the market is acting the way it does and whether to trade in the same direction of the market or against it, right? So sentiment is about emotion, what people think, and this is usually found among traders, right? Among traders, people, the economists, people they claim to be experts in analyzing particular economy or currency pair. So that is among them. In fact, the gurus in the trading, guru traders. I think that is it, right? So the Warren Buffett and whatever. Now, each trader's thoughts and opinions, which are expressed through whatever position they take, helps form the overall sentiment of the market, regardless of what information is out there. So they actually, when you go to the forex.com, my FX book, and those news sites, you realize that the fundamental also take into consideration what it goes hand in hand with the sentiment analysis, right? That's what people have anticipation, right? Expecting that the market will be here and that. So we call the consensus and whatever. So it is actually what displayed there. So like this, that's one is thinking the market will go up, other is thinking that the market will be coming down. So this is it. So a lot of speculations and then rumors. The problem is that as retail traders, no matter how strongly you feel about a certain trade, you can't move the forex market in your favor. Now, this is the sad truth that most of the amateurs do not want to hear, right? The point is, no matter the retailers are people like you and I, right? We that buy accounts, deposit accounts, and then we are not from the institutional side. We are all retailers. Every trader is a retailer, unless the banks, right? The institutional banks and then hedge funds, they are the big players. But anyone who trades normal from your PC at home and your office, we are all retailers. We are all retailers, right? And then we are saying that no matter how strong you feel about any price or anything, your thoughts or your opinions have no influence in the market. Those who have the opinion are the investors. In fact, the financial institutions, the big gurus, the hedge funds, in fact, they are the people we are talking about. You can't move it. So whatever you have to do as a retailer, a retailer, is to just step in their what? In their foot. Whatever they are doing, just follow. It's as simple as that. Don't try to think your opinion. You cannot, of course, you can say something. You can express your opinion, but it will have no influence in the market. That's the sad truth. So that is it. Now, even if you truly believe that the dollar is going to go up, but everyone else is bearish on it, there's nothing much you can do about it unless you are one of the, yeah, like you said. Now, as a trader, you have to take all this into consideration. You need to perform sentiment analysis. It's up to you to gauge how the market is feeling, whether it is bullish or bearish. If you choose to simply ignore market sentiment, that's your choice. But hey, we are we are telling you that it is your loss, right? You just have to have an idea of whatever it is. I do that. Even after studying my technical analysis, if I finally have to enter a trade or whatever, I'll just have to check the calendar for that day before I decide how much I want to go in, or either I have to stay away from the market. So that's why we are saying that they go hand in hand. Sentiment analysis is often used as a contrarian indicator. Contrarian indicator. If you say someone is a contrarian trader, it means that when everyone is saying that the market is going to go up, you are saying that the market will sell. It's as simple as that. You are just the opposite of whatever everyone is saying. That's the contrarian one. There are a couple of ideas why this is, right? One idea behind this is everyone, as if everyone, like almost everyone shares the same sentiment, then it is time to go hipster, and then trade against the popular sentiment. That is it, to do against it. For example, if everyone and their mamas are bullish on USD, right, Euro USD, the fiber, then it might be the time to go short. You are just doing the opposite. So unfortunately, you will have to go further down the school to find out. Don't worry. You have to know why you have to do that. Why people decide to be controlling what traders. So it's as simple as that. Another idea is that most retail forex traders are not savvy. They may not have the know-how, the technical know-how. Depending on where you find statistics, between 70 to 80% of retailers lose money. They are saying that most of the amateurs or retailers lose money. Why? Because in fact, there are a number of factors which contribute to that. We look at them later. So if you know that all these unprofitable traders who are usually wrong are all currently long on USD, then it might be a good idea to do the opposite of what they do, right? Being able to get market sentiment, aka sentiment analysis, can be an important tool in the toolbox. What type of analysis? What type of analysis? Okay, what type of analysis is best trading or is the best, right? One might ask, because you have done 3 of them, right? Someone might ask, which of them is the best, right? So that's the question most of us as amateurs will ask. The time the beginners will ask. Throughout your journey as an aspiring trader, you find strong advocates for each type of analysis. Whereas technical analysis, which is known as the TA, involves poring over charts to identify patterns or trends. Fundamental analysis, right, FA, involves poring over economic data reports and news headlines, right? Hardcore traders in the technical analysis come stream, like the screen, right? Fundamental analysis doesn't matter, right? Everyone is against the other. One is saying, let's say if I'm a technical analysis, I may say that fundamental analysis it doesn't matter. That's what everyone will be saying, just to favor their own point of view, right? Now, while folks in the sentiment analysis may also say the same thing, but the point is, fortunately, the different types of market analysis complement each other. So this is what you need to know, right? That all of these complement each other. They go hand in hand, right? So even hardcore technical traders, right, may find useful fundamental knowledge, right? That can help with their technical analysis and vice versa. So in real world markets, prices are constantly changing and usually what develop trends. Those changes in price can and do affect fundamental, right? They affect each other. This means that trends in prices affect fundamental analysis just as fundamental also affect prices. Now, as we'll find out in later lessons, identify trend is a huge part of technical analysis. Do not be fooled by these one-sided extremists, right? One saying that one is better, so thereby foregoing the rest. No, one is not better than the other. They are all just different ways to work. Look at the market, right? Now, at the end of the day, you should trade based on the type of analysis you are most comfortable and profitable with. To recap, technical analysis is the study of currency price movement on the charts, while fundamental analysis takes a look at how the country's economy is what's doing, right? So, wait. So, in fact, we end here. I don't want to bore you with the reading. I think that is enough. With this information, it's okay. So we move on to the next episode, and that will begin with was stage one, stage two, right? So whatever we have done so far was in stage one. So we'll move to stage two, and then I think gradually you get to what the end of what the series, and then you have your information and everything was intact. Thank you very much for joining or in fact for watching. Please like and subscribe. And then if you want one-on-one lessons, please check in our page description and get back to us. Thank you very much. See you in the next episode. Bye.